As you scan the country and reflect on the happenings of the last 25 years, it becomes clear that we are presently experiencing a distinct and risky period in American history. On the economic front, the United States has managed to steer clear of a major recession since 2010. This has led to a time marked by remarkable job opportunities and low interest rates, shaping the way people think, from Wall Street to Main Street. The long stretch of economic success has somewhat obscured the recollection of financial challenges. As we near the end of this year, worrisome trends are surfacing across different sectors, indications of a potentially alarming and troubling future. Before every economic downturn, certain signs consistently appear, serving as early warnings of impending turmoil. This pattern is often compared to a canary in a coal mine, where a particular industry or indicator acts as a foresighted precursor, providing a sneak peek into what awaits us. One of these early indicators is something you likely encounter daily but may not give much thought to: the trucking industry, also known as freight. It's a fascinating example of this economic phenomenon. A slowdown in the freight sector often precedes a broader economic downturn. Take, for instance, July 1990, when the trucking industry experienced a significant slowdown. Soon after, home prices in Los Angeles took a sharp decline. Over a span of 6 years, the LA housing market plummeted by over 27%. Reports even mentioned that in some upscale neighborhoods, property values decreased by more than 50%, all following the onset of the trucking recession. Fast forward a decade to March 2000, and another trucking recession swept across the nation. This time, it foreshadowed the burst of the tech bubble. From March 2000 to the lowest point in 2002, the NASDAQ, an index tracking major tech companies, plunged by 78% from its peak. While this recession didn't heavily impact the housing market, it did have severe repercussions for the overall economy. Unemployment soared for years, and even giants we recognize today, such as Amazon, faced staggering declines, dropping nearly 95% from peak to bottom. Then came the trucking recession in April 2006, signaling the onset of the global Great Recession, which eventually triggered the most significant housing collapse in modern U.S. history. From August 2006 to February 2012, housing prices nationwide plunged by around 30%, with even more severe consequences in certain overheated markets. Essentially, this industry has consistently acted as an early warning system for broader economic downturns. When it faces a downturn, the rest of the economy typically follows suit. As of today, the trucking industry is grappling with one of the most severe recessions in its history. While the broader economy might not show it, the freight industry is currently in panic mode. In the past few months, a series of bankruptcies have laid bare the challenges this sector is facing. It all began with Yellow, a transportation company with roots dating back to 1929. With a history that spanned numerous recessions and wars over the past 90 years, Yellow, with its 30,000 employees and 12,000 trucks, filed for Chapter 11 bankruptcy in August. This sudden shutdown sent shockwaves throughout the entire industry, signaling a realization that something significant was amiss. Following this, the industry's downward spiral persisted. In October, Convoy, a Seattle-based digital carrier backed by Jeff Bezos, closed its doors. Just 18 months earlier, the company had been valued at nearly $4 billion. In a memo to employees, CEO Dan Lewis attributed the closure to an unprecedented collapse in the freight market and significant monetary tightening. Unfortunately, Convoy wasn't alone in facing these challenges. In the weeks that followed, numerous operators filed for bankruptcies. Surge Transportation, a broker with $200 million in revenue, filed for Chapter 11. FreightWorks, a North Carolina-based trucking company with over 140 drivers, halted operations. Certified Freight Logistics in California also shut down, leaving over 150 drivers jobless overnight. The list continues, and you can find more details on major closures by checking out Craig Fuller's Twitter thread. It's quite extensive and highlights the magnitude of the industry's recent struggles. In summary, the trucking industry is facing significant challenges. The pressing question now is whether this turmoil will extend its reach into other sectors, as it has historically. To answer this, we can turn to a key piece of evidence that has accurately predicted the last 8 recessions in the United States. When you consider this alongside what I've just explained, it raises serious questions about the future economic landscape in the United States. Before I reveal this crucial piece of evidence, I'd like to ask for just 2 seconds of your time to hit that like and subscribe button if you're finding value in the video so far. Each like is a substantial support to this channel, and your small gesture of appreciation means a lot. Thank you. Now let's delve back into the topic. What we have here is the yield curve. You've probably heard this term thrown around quite a bit, but the current state of the yield curve is both fascinating and alarming for the economy. Typically, when the yield curve inverts, it signals trouble ahead. I won't dive into the technicalities of what the yield curve is, but just remember that when it dips below this line, it usually foretells economic challenges. To add an extra layer of intrigue, we also know that these challenges typically don't materialize until the yield curve reverses course and starts its ascent back to normal. Today, we find ourselves in that phase. The yield curve inverted months ago, and now it's gradually approaching the healthy line again. Throughout history, this is usually the point where the pain begins to set in. If you look at the last recession, we didn't truly feel the impact until this behavior was evident. And today, we're starting to witness similar patterns emerging. In 2008, for instance, the yield curve returned to almost normal levels before the real hardships unfolded. In 2006, we observed it invert, and by 2007, it had rebounded. By the time the recession hit, the curve had nearly returned to what was considered expected levels. This is the kind of pattern we are witnessing in today's bond market. The yield curve took a substantial dip below zero in the summer of 2022, hitting levels not seen since the 1980s. Typically, experts measure the severity of an impending recession by how far it descends during this phase. Going by this dip, the outlook appears quite grim. As the year comes to an end, we find ourselves in the early stages of this recovery, and there's a palpable sense of anxiety as everyone gazes into the future, wary of the looming specter of a potential recession. Similar to the previous occurrence, it might take some time before warning signs start to surface. As I mentioned earlier, the curve could bounce back to its typical levels before any indications of impending trouble become noticeable. When you pair this perspective with the developments in other indicator industries, such as trucking, it becomes evident that there might be significant challenges ahead. Keep in mind, a decrease in freight activity indicates reduced consumer demand and economic uncertainty. Now, factor in the inverted yield curve, where short-term interest rates surpass long-term rates. Viewing this situation as a whole, it becomes a lot more alarming. The inversion of rates signifies a lack of confidence in the near-term economic outlook. These combined factors are sounding a warning that a significant economic crash could be looming, indicating weakening economic conditions and potential recessionary pressures. While we haven't witnessed substantial declines in most industries across the United States just yet, if you take a closer look in the right places, it becomes apparent that something isn't quite right. The future remains a giant question mark. Thank you all for watching, as always. Please make sure to hit that like and subscribe button if you found the information valuable, and don't forget to share your observations on the ground in the comments below. This is particularly important for all you truckers out there.